If you think trading is about knowing dozens of indicators, or finding some magical strategy that just prints money, let me hit you with a harsh truth up front. 90% of traders lose money for one simple reason. They don't understand what the market is actually doing. They don't recognize trends. They don't know when the market is about to reverse. This video is going to teach you something that if you truly get it, it will change how you see the market forever. By the end of this video, you'll understand how the market moves, how to look at price and immediately tell, is the market in an uptrend or a downtrend? And more importantly, when is it likely to flip? I'll also show you why most traders enter at the exact point they should be exiting. So if you really want to understand trading, not just memorize patterns, stick with me until the end. Let's get started.
In this video, I use the term BOS for all market structure breaks to keep the explanation simple and consistent. Today, we're diving into one of the most fundamental concepts in trading. Without this, any strategy you try is basically meaningless. We're talking about market structure. Those terms you may have heard: higher high, higher low, lower high, and lower low. But today, we're not just memorizing acronyms. We're going to truly understand them. What market structure really means. Before you jump into any strategy, there's one thing you need to grasp. The market doesn't move randomly. Unlike what many people think, price doesn't just jump up and down for no reason. The market has a language, and that language is price movement. Price moves in patterns. It has structure. That's what we call market structure. Market structure tells you who's in control, the buyers or the sellers. When buyers are stronger, price moves in a certain way. When sellers dominate, it moves differently. Here's the key. If you don't understand market structure, every signal, every indicator, every strategy is just a guess. But once you understand it, the market starts making sense. You don't just see candles, you see market behavior.
The four key elements. Now let's break down the alphabet of the market. Four simple yet powerful concepts. HH means higher high. Price makes a new high above the previous high. It shows buyers are strong, pushing the market higher. HL means higher low. When price pulls back, it stops above the previous low. Even on a dip, sellers can't push price down as much as before. Buyers are still in control. LH means lower high. A new high forms, but it's lower than the previous high. Buyers are losing strength. And finally, LL means lower low. Price drops below the previous low. Sellers are dominating, pulling the market down. A little tip for you. The market only moves with these four building blocks. All trends, all major moves are just combinations of higher high, higher low, lower high, and lower low. Pretty simple, right? Now let's put these four pieces together and see how trends are formed. Uptrend structure. An uptrend is just a repeating pattern of higher highs and higher lows. Here's how it looks. Price goes up and forms a new higher high. Price pulls back and forms a higher low. Price goes up again, forms new higher high. Pulls back, then higher low again. Notice, the market moves step by step, like climbing stairs. Pullbacks are normal. Price never goes straight up. Keep an eye on this key level, the last higher low. If it breaks, the uptrend is in danger. That's your first alert for a possible trend change. Now in downtrend structure. A downtrend works the same way, just reversed. Lower highs and lower lows. Price drops and forms a new lower low. Price retraces and forms lower high. Drops again, then lower low. Retraces, then lower high. Even when price retraces upward, the trend is still down until lower high breaks. Here's a key level, the last lower high. If it breaks upward, sellers are losing control. It means potential trend change.
Break of structure. So when does the market switch from uptrend to downtrend, or vice versa? That's when we talk about a break of structure, BOS. Example, Uptrend with higher high and higher low. Price pulls back and breaks the last higher low. The stair-step pattern is broken. Buyers couldn't defend that level. This is your first warning that the uptrend may be over. But a break is just a first signal, not confirmation. Confirmation comes when the new structure forms. Higher low fails to make a new higher high, a lower high forms, trend flips. Same logic for downtrend. Break the last lower high, then watch for higher low formation and higher high for confirmation. Power line. The market doesn't reverse with one move. It reverses with a structure change. Common mistakes traders make. Misidentifying higher high and higher low, thinking a trend changed too early. Jumping in too soon, entering before pullback ends or before checking key levels. Ignoring structure breaks, missing early warning signs. Relying solely on indicators. The market is perfectly readable with higher high, higher low, lower high, and lower low. Indicators are supplementary, not primary. Rule of thumb, always check structure before entering a trade. Applying market structure. Entry. In uptrend, wait for pullback, then enter as higher high resumes. In downtrend, wait for retrace, enter as lower low resumes. Exit or risk management. Always watch the last higher low or lower high. Break of these levels, close or adjust stops. Market direction. Multiple higher high and higher low, only look for buys. Multiple lower high and lower low, only look for sells. Follow structure first. Let the market tell you the path, then act. That's it. Now, let's put it all together. Market structure is language of price. Higher high, higher low, lower high, and lower low is your real tools. In uptrend, higher high and higher low. Watch last higher low. In downtrend, lower high and lower low. Watch last lower high. Break of structure, first alert. Structure formation, confirmation. Don't rush, don't guess, don't blindly follow indicators. If this video helped you, subscribe to catch all pro-level content. Next video, internal structure and external structure. We'll break down how internal and external market structure works and how you can use it to trade smarter. Drop your thoughts in the comments, ask questions, and stay tuned. Thanks for watching. See you in the next one.